Mark, welcome to the Wealthy Wellthy podcast.
Hey, Krisstina, thanks for having me.
We're doing a flip here. Had a great time on your show, and now it's so fun to be on the other side of the microphone. So, your topic is something that I think most people find pretty dry and boring. Two, they don't spend any time or let alone enough time thinking about or considering. And three, I think a good majority of those that would fall into needing to listen and learn from you don't even realize that it's something they should be doing. Would you agree with those?
Absolutely. For the most part, it is not a desirable topic. People are very uncomfortable talking about taxes. But what I would say is when you help them understand the return on investment into tax planning, and when they realize that the return on tax planning investment will likely be far greater than any real estate, cryptocurrency, or anything else security wise that they could invest in, whether they're enthusiastic about stocks and whatever other things are out there, then suddenly they start to realize that there's a reason why I talk about this stuff so much.
Yeah, it's interesting. I mean, I certainly didn't pay attention to taxes for the longest time. And then someone that, really looked up to or admired their kind of business savvy, they said, the biggest raise you can give yourself initially is to save on taxes. And it was just that shift in mindset that I was always hustling to try to make more money in my business and wasn't paying attention to taxes at all, which was kind of abdicating it to my CPA and was kind of keeping my fingers crossed that he was doing a good job, but that I didn't pay attention at all. And then after I heard that, I actually got really interested, like, what am I paying in taxes? And is my CPA really working for me? And do I have a strategy? And just by learning, just again, that one like mindset shift in my head, that next year, by not making any more money, but me paying attention to my taxes, I saved over six figures
Wow,
in
that's
taxes.
awesome.
I mean, I just thought all CPAs were the same and they're doing their best to save money on taxes. And I mean, it was just such a wake up call to realize like he was right. That mentor was right. I gave myself a six-figure raise by just Krisstina Wise paying attention to my taxes, which required I change CPAs, by the way, once I start
Mhm.
really learning and questioning these things. And I realized too, it wasn't boring. There was so much like just for a layman like me that isn't into taxes at all, but love business and like investing and love wealth building, like all those pieces, I realized like, oh, just by knowing a few things and then teaming up with the right CPA and tax strategist, it's actually pretty exciting because there's so much you can do in tax planning that most people don't know about. So that's why I was so excited but to talk to you today so that you can share with the listeners that, some of the things that I've learned over the years and why paying attention to your taxes are so important. So, first of all, to start us off, before we jump into a conversation on taxes, and the reason why I want to give that little prelude for all of you listening, like, don't pause, don't, you know, go on to the next podcast. I roll like, oh, Kristina's going to talk about taxes. This is boring. I'll wait till the next podcast. Like, really listen to this one because I promise you, you're going to learn some things that are going to affect that bottom line. So, but before
Mhm.
we jump into that, give me some backstory, Mark. What got you into accounting, becoming a CPA, specializing in tax, and turning this into a business?
Yeah, I tried a lot of things in my 20s that I wasn't good at. And I just realized I was always good with numbers. So I decided to go back to school. And, in my prior life, I was a social studies teacher in New York City. But a little over 10 years ago, I decided to just change everything and focus on my strengths with numbers. And I found myself really bored as a CPA doing audit work, and my way out was going to be real estate investing, hanging around other real estate investors. And because I really love the idea of really doing what you love and having financial freedom, and it seemed like the way to do it. And they started asking me questions. How can I reduce my taxes? You're a CPA. You should know this stuff, you know, and I didn't know how to answer the question, like you're a Jewish CPA, you could at least tell me. And I'm like, no. And I was like, man, if I'm going to learn this about real estate investing and not even know tax planning, like what's the point of my CPA? So I joined the American Institute of Certified Tax Planners, and all of a sudden realized that investing into tax planning was absolutely the most effective way to hit financial freedom and it provides a greater return on investment than any real estate. And I became obsessed with tax planning and just immersed myself in the material, which allowed me to take on a few clients. You save them a couple $100,000. They talk to their friends, and pretty soon we have a full blown practice specializes in tax planning. Fast forward, we have probably around 100 clients, and we have clients who can save as much as $3 million a year in taxes with our planning strategies, and it's just very exciting to see all the different ways you can do it. So, I really do what I love, and I'm extremely passionate about it. And it's very interesting and exciting to see all the different ways you can legitimately reduce your taxes with so many different vehicles out there.
Awesome. What a great story. I didn't even know that story. I love it. It's
Mm.
like you accidentally stumbled upon this thing that you love and you're really good at. And now you get to help a lot of families keep more money in their pocket and ultimately build more wealth. So that's my passion too. There's so many things we can talk about today. I think for my entrepreneurial listeners, what would you say are the biggest mistakes that kind of small business, small entrepreneurs make when it comes to taxes?
I think it depends. Obviously, and this is such a cop out. I hate saying it depends. That's such a professional services answer, right? But here's what I would say is that, our profession undercharges and underserves. So you think you're getting a good deal because you're only paying your accountant 2,000, 3,000 a year, but then your accountant can't answer can't schedule calls with you, and they can't really do an adequate job on your return, and they can't strategize with you, and there's no way and it's not really so much their fault because at that price point they can't afford the staff to provide all the additional support. So I would say that the majority of entrepreneurs out there, especially if you are highly profitable and paying taxes, your issue is you are underpaying and you are being underserved. There is no way any accountant can economically do what needs to be done to effectively and efficiently do that return in a complete and accurate way and show you how to save you hundreds of thousands of dollars. So you need to shift your mindset from going to looking at this as an expense that you're looking to cut and minimize to an investment. How can I invest in the most appropriate tax advisor and CPA that's going to minimize my taxes and be a strategic partner in this journey together who can legitimately save me millions of dollars over our lifetime of our relationship? Now, if you're just getting started and let's say you're not profitable, then maybe that's not as much of an issue here. But, here's the thing. I think that at the very least, when you're starting a business, you should at least sometime have some sort of conversation at the very minimum to know what can you write off on your taxes. What are you legally entitled to as a tax deduction in the law? Most people never even have that conversation. They make some assumptions. It goes to their account. They may be missing out on hundreds of thousands of dollars of tax deductions that they're completely unaware of because they never took the time to learn it and have a conversation.
Yeah, actually, that's not the answer I was anticipating, but I have to say it's spot on that I know for me, I was paying for like a tax. He did my taxes, like tax prep maybe. And again, I'd send everything in, I'd send over my QuickBooks, he'd file the tax returns and tell me how much I owed. And that was that. Again, that's as much time as I spent thinking about my taxes. And we never had any conversations during the year at all. It was just tax prep. And it was, in the grand scheme of things, it was a minimal amount. Like it's just an expense item to get the tax
Yeah.
prep. And then, now when people know how much I pay in tax strategy and planning, like, holy cow, that's like a salary in many cases. I'm like, yes, but my tax strategist, we talk all year long and I don't make any investment decisions without talking to him first. And we look at things quarterly and we break things down and we're doing projection and he's always looking for ways to save on taxes. And even my last tax, he saved me like $20,000 in taxes by asking a question, for example, like, you have this big accounts receivable on your books. Like, is this ever going to be paid? I saw it on here the last year also. And I said, no, I just kind of really have it in there as a holding spot, hoping maybe one day I'll get my money back on that. And he said, oh, well, if I can remove this and do XYZ, that's going to save you 20 grand in taxes. So it's just something simple like that, one decision, let alone everything else. So to me, I
Hmm.
just look at it, this is an investment in my business and in my overall life to be able to pay somebody that can think and think outside of the box. And it's not about tax prep, but it's really about tax savings. How do we maximize the amount of savings I can get completely by the book? So to your
Oh
point
yeah.
exactly, I think that probably is one of the biggest mistakes because we've been conditioned to think that, oh, this is just, that sounds expensive. I want it to be as low cost as possible.
Yeah, and you'd be amazed by how illogical some people are, where, maybe my salesmanship is not the best in the world, but I mean, I don't know how much of a salesman you need here. We get these folks who are making seven figures of profit, but then when they see how much we need to charge for us to be effective and have enough funds to hire the best and most qualified staff, and also to continue research on top of our services, they just can't see past the idea that they're going to maybe double or triple their fees for added services. They just, they have this block in their mind and they don't realize that this is the most important and effective investment that they'll ever made into their finances. So, it's when you can see it that way. I mean, just being able to see investing, how you can invest into a strategic partner and the ROI is just so important here.
Great answer. What's the second thing that, like, as far as missing maybe deductions or maybe taking deductions that aren't really appropriate, but if you
Mm-hmm.
got audited, it could be problematic or red flags. Like when you start working with an entrepreneur that maybe has been working with what I call a tax prepper versus a tax planner, what do you see most often? Is there a recurrent theme where you're like automatically, hey, we should be doing this, this, and this?
Yeah. So on the deduction side, usually at that point, they know what they can write off of their taxes, but we'll give a refresher. And what they'll often sometimes learn here, just this camera, that, learning about, what qualifies for bonus depreciation and opportunities to create the bonus depreciation, accountable plans where you can reimburse your S Corp for home office. These are all small things. One that is more impactful would be the pass through entity tax selection if you have an S corporation. This allows you to offset more than $10,000 of state taxes against federal. And for high income earners, this can be, five figures, six figures of savings here. And so when it comes to missed deductions, also, I would say real estate investors always forget that they can write off their property insurance. We have a lot of real estate investors and they just keep on forgetting that that's a tax deduction. We got to hunt them down for that. And then when I think about missed opportunities, and where we have the greatest impact in identifying is the more advanced strategies and structures. And there are some things that are reserved for the top 1% that are going to be missed if they're not having a strategic relationship. So maybe they catch, maybe they miss, on opportunities to create bonus depreciation or Augusta rule and all these nice little things here. But then there's these big ticket items that create 6 and 7 figures of savings that you're just not going to know if you're tax prep focused. And that's where we see the greatest amount of missed opportunities and where we go in and have an impact.
And is that the mindset of your firm that our job is to find extra savings that have been missed and to do that digging or that work or that consultation? Because
Mm-hmm.
I just think that it would be the mindset of the firm and the philosophy of, hey, this is our job and our value and what we get paid for, as opposed to, hey, we're going to be working 80 hours a week for, this month out of the year to get all these tax returns out.
Yeah, absolutely. So one of the first things we do with prospective clients is we review the returns to see what we say. We want to see if the IRS owes you any money. And what we'll do for free, and as we evaluate things in the scope of work, we'll review their return with them and show them what the missed opportunities are and if those missed opportunities are amendable. So for one client, sometimes you can amend. So one of the most common missed opportunities we see is there's no cost segregation studies, which is a depreciation strategy for the real estate. We saw the client overpaid by about $450,000 in taxes. About 160,000 of the missed savings was recoverable with an amendment. So those are some of the big ticket items that we'll point out. And sometimes we'll evaluate the return on investment into an amendment when you consider, the additional fees and, potential compliance risk if there are any in the amendment. So those are things that we'll consider in the prior year returns. And then as we do the return, if we see sometimes because we know our clients and we have the resources to know our clients, we will identify missed opportunities and follow up with the clients as we do the returns as well.
Great. So you mentioned the Augusta rule. I take advantage of the Augusta rule. Can you share with the listeners what that is?
Yeah. So the Augusta rule allows you to essentially, if you rent out your personal residence 14 days or less, you do not have to recognize the revenue on your tax return. And the opportunity that many people have here is they will rent out their residence to their businesses. If it's an S Corp or a partnership or a C Corp, you can charge your business rent and the business gets the tax deduction. But when it hits your account, you do not pay any taxes on the revenue. So essentially, you would look up the fair market value of what would it cost for your business to have to use your home, and you create a legitimate opportunity for the business to use your home for a business event, a board meeting, an event, et cetera, and you create a tax deduction. Now, I host real estate investor poker and tequila pizza nights. So the tequila and the pizza is all written off, and my S Corp pays me rent to do this. You don't even, and it just has to be your primary residence. You could also do, even if you don't own the home, you can still do it. And it's a nice tax deduction. We love ways where we can create tax deductions without actually losing money. Well, I lost a couple of bucks in the poker games, but it was low stakes poker. I lost like 20, 30 bucks. And I kept the leftover tequila. That's one I did. Now, here's another example with the Augusta rule. I'm actually visiting my mom for the holidays, and I hired my mom, which we love hiring the family as a great tax. I'm shifting my income into my mom's bracket and supporting my mom. We're actually going to do some business activities while I visit my mom for the holidays. And I'll pay her for 2 days of rent to conduct business activities in her home. So here's a more resourceful and creative way of doing it. So my mom, I'm going to pay her rent and she doesn't have to report it. I get the tax write-off and my mom doesn't pay any taxes on it. And now I'm supporting, my mom has more money coming from me, which is always a good thing because I wasn't the easiest kid to raise. So I probably can show some gratitude in the meantime as well during the holidays. And that helps her out with buying gifts and stuff.
I love that. And that's just another, I see missed opportunity for, especially for entrepreneurs, is being able to hire your kids, especially underage kids,
Yep.
and being able to use those funds for future college funds. And it just super easy stuff that very few people are taking advantage of. Again, this is something you probably, it's like one of the first things you would advise, but few CPAs are giving this type of advice to their entrepreneurial clients. So share a little bit more about that, like how you can hire your underage children.
Yeah, we love this as well. And now you pay your kids the fair market value of the services performed in the business. And if they are working for your business, they don't have to pay FICA taxes if you do it through a sole prop. And a lot of people create management companies to do that. And essentially, let's say you're taxed at the, 37% tax bracket and you hire your kids, they're going to be paying taxes at their bracket, which is likely zero on, first what I don't remember what the standard deduction is for 24. It always changes, like what first $13,000. And then a lot of people say pay your kid the standard deduction and you're done. Well, why not pay them more? Because after that, you're at a 10% bracket. Why not pay them 30,000 legitimately? Pay them what the fair market value of their services is. So if you have a kid who's really sharp and he can learn some basic QBO, you can pay him the fair market value of some basic bookkeeping or financial analysis or photography. Do something that they're good at so you can pay them more. And that can also go into a Roth IRA to finance their college. Lots of cool stuff here. Now, this is really cool foundational stuff that accumulates year after year. And, it's really good to have those foundations down. Now, we share that with all our clients, but also we like to focus on the big ticket things as well that create the millions of dollars of savings. But we love hiring the kids. And also, I think another benefit besides just for taxes here, I love the idea of getting your kids in the business, giving them responsibility here and, helping them learn what they're good at, having some legitimate real world business experience with the family.
Yeah, and I totally agree. And again, when I just started learning some of these basics and realizing like oh, this is just low-hanging fruit. And like you said, like, yeah, there's big strategies, but the place to start is just the low-hanging fruit that's just easy to put extra dollars in your pocket. And I had my kids on my payroll, and that a good portion of that put them through college
Which I
because we
love. And it qualifies them for the American Opportunity Tax Credit, which if you're a high income earner, you'll likely make too much to get. So that gets them an extra tax credit. And you're going to give your kid money anyways. Why not make it tax deductible? And now you can have tax deductible business meetings with your family.
all of the above, exactly. And again, these it's just such easy, low-hanging fruit that everybody should be doing. Every entrepreneur should be employing these just very simple strategies. And do you advise as far as now, this isn't taxes for the entrepreneur, but it can help then when my kids were became young adults after college and just starting their careers, just being able to gift them money each year, like could, give them money or do different things, but just even the gifting and doing the gifting every single year, once a year, really doesn't do a deduction for me necessarily, but it's a big thing for them because they don't have to claim that as income. So can you talk a little bit about that? Just really again, that my purpose of saying this is that those listening can be like, I'm not doing that. I'm not doing that. Wait, I'm not doing that. And this could be 5 to 6 figures of tax savings.
Yeah. So gifting is also, especially if you have a lot of assets, gifting is a really impactful way of estate planning. And while we're not experts there, that's another way of just, gradually unloading your assets so it doesn't get hit with these estate taxes and is a little simpler. And also, if you were to gift it and they invest and they get taxed at their marginal rate instead of yours, obviously you got to watch out for the kitty tax. Well, all sorts of ways where you can get your family involved in what you're doing in a tax advantaged manner is a step towards what I call the tax-free lifestyle, where you're doing what you enjoy and what you're passionate about and would have preferred to spend your money on anyways, but now it's tax deductible because you're enjoying your meetings with your family, connecting with your family, and also writing it off on your taxes legitimately because they're involved in the business. And obviously, gifting is another way that can create tax advantages when you look at what is done with the funds and when they're in your children's federal and state tax brackets.
Awesome. All right. So that's some low-hanging fruit. Again, my intention of asking these questions is just to cause this. Wait, I never thought about that. Nobody's ever talked to me about that. Let me check into it. The second piece then is, I've been an entrepreneur my whole life. And so one piece of being an entrepreneur is that we get a lot of advantages. It can write off a lot of things. And I've taken full advantage of all the family stuff and do family business meetings and trips that we can write off. But what about the W-2? Those that tend to be, high income W-2s are in a really high income bracket and can't necessarily do some of the tax planning that we do. What do you do are you talking to them about real estate or doing a side job where they're setting up a separate LLC? What type of advice are you giving to the high income bracket W-2s?
Absolutely. So I have a whole playlist on my YouTube channel on just on tax strategies for high W-2s or W-2 earners. And there's a misperception that you can't do anything because your tax is determined when it goes through that pay stub. But there's actually a lot you can do, and especially if you're a high income earner. And so some of the things that we're doing, and we have a decent amount of high W-2 earning tax planning clients. So some of the things that they really love is with real estate investing, if you get your wife to have real estate professional tax status, meaning essentially they're full-time in real estate, you can now create losses with real estate through the depreciation and use those losses to offset the taxes coming out of your W-2. You can invest in oil and gas investing. Let's say you don't have time to manage real estate, or your wife works full time or your husband works full time. You can invest in oil and gas. And that's a passive investment. You do nothing, and your investment will create tax deductions. Short term rentals is a workaround. So let's say you both have W-2s. You can't get real estate professional tax status. You invest in short term rentals, create massive depreciation to offset your W-2. And then there are some ways you can start businesses that give you access to maybe equipment or other things that give you massive bonus depreciation. And with leverage, the cost to create the tax deduction is less than the tax savings. So there are instances where you can invest maybe $100,000 into an asset for maybe a $600,000 or $700,000 tax deduction, that where you're going to have the money come back in the form of tax savings in year one and some future cash flow. We're also helping clients invest into solar panel rentals where you get bonus depreciation to offset your income. and tax credits that can give you tax savings even against prior year taxes. And there are some more advanced and sophisticated charitable structures. And in all these strategies, just about, unless there's really good profit, there's either going to be really good profit combined with tax savings, or you're going to find that the tax savings is far in excess of the costs to create these tax deductions.
Wow, that's some good advice there. All right, we'll make sure to point people to the YouTube channel. And so if a W-2 is coming to you and they're just doing their 401k match and doing all the normal things and they're in a high tax bracket, combined household income, they come to you. And is that part of the work you're doing is saying, hey, all right, let's look at some options here. We can invest in real
Yeah,
estate. We can do some short-term rentals. We can do some oil and gas. Is that part of how the conversation's going? And then you're guiding them through that process?
absolutely. So, and everybody's answer is going to be different. You can take two people with the same filing status and income tax bracket, and we can go down completely different paths. Maybe one is really interested in real estate investing, or maybe one is really invested in oil, or maybe we have someone who says, I just don't want to do anything at all. Just do what you got to do. So the number on my 1040 is the lowest possible amount of taxes owed. So, and other people love exploring these different tax advantage investments. We have one guy who goes down to the oil rigs and puts on the hard hat and inspects the wells, and he loves the ROI on the oil. We have other guys, doing some more advanced charitable structuring and excited about that. So, the answer is going to be different from everyone. And oftentimes we're stacking multiple ideas on top of each other to maximize tax savings, and really looking at how one strategy impacts the effectiveness of another strategy. So we do what we call holistic tax planning. We're looking at every possible strategy, how it impacts one another, and also every source of income, whether it be investments and W-2 or business income, and looking at all this stuff now and in the future, what solutions are going to create the best possible outcome.
Yeah, so something you're saying there that kind of really leads into this last part that I wanted to, again, kind of bring to the surface is I think kind of the common thinking is I pay taxes, I do my tax returns, I maybe have a CPA that helps me do that, like we've talked about, and maybe even a little bit more advanced, perhaps. But tax is this separate thing over here. It's just something we have to do. And those that are paying attention want to minimize that. Those that aren't, they're just paying whatever taxes, tax bill that they get. But the way you're talking about it, which I think is so important, is in what I just called the wealth building game. And so when we're less about just making income and paying our bills and maybe retiring one day, which I think that's just kind of the majority way of people thinking about this, it's a shift in saying, no, I want to build wealth. I want to create financial freedom. I want to have cash flow. I work really hard. I want to keep as many dollars in my pocket that are, rightfully mine. And I want to build wealth as quickly as possible. And so when we move from that, hey, I'm matching my 401k or my Roth IRA and doing some retirement stuff and paying my taxes to move it to this other side of the equation, it's where it gets really exciting. And it's like what you're talking about. It becomes all of it together, where, yes, we're talking about your business and how to structure your business and how to what are the types of write-offs or what can we do? Can we put the kids in there? Are we taking advantage of the Augusta rule? Like, how do we optimize everything for the business is one piece of the puzzle working with your tax strategist like you. And
Mm-hmm.
then it's like, okay, how much do we need to, are you investing in stuff and that, but you're maybe buying real estate or doing XYZ. But now where investments become part of the tax strategy and part of the business strategy, that's where it just starts really having big payoffs. Like you said, all of a sudden you're saving people multiple six figures, these business owners, because it's this multiple play at the same time. It's not these separate pieces. Would you agree with
Yeah.
that?
Oh, absolutely. And I'm not against, a 401k match is free money. I say go for it. But look at the growth of your 401k. You'll be lucky if you get maybe 8 to 12% little by little. When you invest into your tax planning and initiatives and some of these opportunities, you could essentially double there are instances where you could double or triple or quadruple your money year after year after year. And you're going to see a far greater compounding of your wealth through tax planning. And this is not just about tax planning and taxes and IRS. This is about when they start seeing what's possible with tax planning, then they realize what is actually possible with what they can do with when they can retire. what can they invest in now? What can they do with their lives? They can, if you can shave off 10, 20 years from your retirement and now have more time with your family, or if you can fulfill your dream and buy this lake house that you always wanted to buy, or start a yoga studio or a nonprofit with all your tax savings in a tax advantage manner, or give back to society more. It opens up just a whole world of possibilities when you understand what are the tax incentives out there for entrepreneurs and investors. And when you win the tax game, it just opens up this whole new reality of opportunities that go beyond the tax savings and really doing what with your life. What do you want to do with your life?
That's so well said. And that's what real tax strategy and planning is. It's really about business and investing because that's where the tax code, I don't know, 10,000 pages or 50,000 pages, I don't
Yeah.
know. But it's really designed for the business owners and the investors. And so that's what real tax planning is like, how do we build the business and or create the investments that are going to optimize how much we can save in taxes and additional earnings. And it's again, it's a different mindset. It's a different way to think about taxes.
Yes, because the government wants you to invest into vehicles that give charitable deductions. They want you to invest into energy related items. They want you to do things that are going to enhance and provide real estate to the general public. And they want you to hire people. So when you can create an opportunity that does these things, then you will be rewarded by the IRS and it'll open up a whole world of opportunities.
I think it must be pretty exciting from your standpoint that when you have a client, all of a sudden you've kind of restructured things, worked with their mindset, got them to the place what we're talking about, and got them investing and saving them. And all of a sudden they are saving all this in taxes. Like, how does that feel? I mean, again, for me, it's like I always thought taxes was boring. It's something I would never want to do and all the things. And now I'm thinking, man, there's just so much virtue in being a CPA that's really organized and structured like you are to help families save money because like you said, it's money that you can do more giving. It's money that you can use to spend more time with the family. It's, I mean, it's real money.
Yeah, I mean, it is really cool to see what are they doing with their tax savings too, right? So, we have like one client where their quarterly payments are far less because they're just buying solar panels now. And like, what are they doing with this additional capital and watching how they flourish and grow their businesses and what kind of impact, we're really creating a ripple effect in their abilities to build generational wealth and maybe quit their jobs earlier or retire. So it's very exciting coming along the journey with our client and seeing what they're doing and how the tax planning can impact that.
I love it. All right, just one final question here that, I've been a real estate investor for most of my career and I've just loved real estate. I don't even really understand how I saved so much money in real estate through, depreciation, the write-offs and things. I just know it works really well. So I'm always eager to buy more real estate because every time I buy more real estate, I save more in taxes somehow. So why real estate? I mean, I know, like you said, there's other places to invest to get tax incentives and tax write-offs and so on and so forth. But why are you fond of real estate?
I'm fond of a lot of things: energy, solar, charitable. I mean, even stocks are tax advantage, with long term cap gain rates. But I don't think that I've ever found an industry or way of making money that is more tax advantaged with real estate because of what you can do with cost segregation, which allows you to front load your depreciation and bonus depreciation. And then with mitigating cap gains with 1031 exchanges or qualified opportunity zone funds. And when you consider that you can pull your money out with cash out refis, your access to liquidity, even though you're investing a lot of your own money, is still pretty good here as long as you're doing it right. I would say real estate has what I see as the easiest way to minimize your taxes and build wealth. And there's just so much incentive, step up basis. There's just so many different advantages to investing in real estate. But, real estate may not be for everyone because some people may be afraid of being landlords, or they may be really interested in other things, or maybe all their assets and maybe all their capital is best directed towards their own endeavors right now. But certainly I love real estate because there are very few ways that I've seen people get really, really wealthy and pay absolutely no federal taxes.
All right. Well, that's a good place to drop the mic. Anything else that I've missed that I haven't asked that you think's important to share?
I would say that I can't really think of anything, but one thing I would just iterate is, if you are if you are an entrepreneur at the very least, these foundational elements. You don't need to hire maybe the most advanced tax strategist, maybe just take a course, just learn the basics. But if you are earning, over 6 or 7, I would say over 500,000 and up. And certainly if you're earning over 1 million and up and you're not strategizing, you're not at least having some sort of conversation, you probably are leaving hundreds of thousands of dollars on the table, which could really be life changing. So, that's just what I think the audience should think of on this topic of tax planning and what CPAs should be doing for them.
Well, great. Well, Mark, thank you. Every time I talk to you, I just pick up something new. Like, again, just a little shift, like, oh, yeah, I didn't quite think about it that way. So, in the show notes, I'm going to put a link to your YouTube because you have just so much valuable stuff that obviously is for free and you just teach. And I really appreciate that. And
Awesome.
then we'll put a link to get in touch with you as well. So, anybody that says, I think I need to, step it up with my CPA, we'll make it easy for them to reach you.
Yeah, absolutely. And there's a tons of free resources on our sites as well. We do lots of free live open calls and things of that nature. And we try to help out as many people as we can. So feel free to just reach out. I'm very accessible. And we hope to connect and help as many people as we can.
Yeah, thanks so much. And again, for those of you that made it to the end, the whole purpose of me wanting to bring Mark on and to introduce Mark to you was just to get you to shift your thinking like, hey, tax planning could be exciting. We might be able to make a lot more money by being able to keep more money. And that's the first place when people are trying to earn more. I'm saying the first place to get a bigger paycheck is see the place you can save money, and taxes is usually one of those easy places to look. So, Mark, thank you so much.
Yeah, absolutely. This stuff can be really fun, guys. All right. So don't fear your accountant and don't fear the IRS. There's a lot of fun stuff out there. Very fascinating with some of the stuff we get to discuss.
Awesome.
Thank you.
Thank you.
Thank you. Thanks for having me, Krisstina.
You're welcome.